Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Market 5. We are trying to track down Marlon Weems as we speak right now, but we got a familiar voice to join us for a few minutes. Garrett Cook. Garrett, how you doing this morning?
I'm doing well. I hope everybody had a great week last week and a great weekend.
Yeah, just real quick, we always talk about the fundamentals and the macros. Anything going on this week or anything over the weekend? Do you think that might help define the market's movements this week?
Most of the movement seems to be mostly FX driven. That's kind of been the discussion I've been having with a bunch of the guys as we try to hunt down individual trades for traders during the day. We've been looking for what signals are going to be pushing equities, and it seems to be it's going to be the FX markets. And you have a lot of the news coming out of Greece. That was a major vote this weekend. And then on top of that, you have the whole interaction with Russia and China. So we're going to be looking for a lot of currency action coming out through swaps at the ruble and also with the yen. And furthermore, from there, we're going to be looking for a bunch
Hello,
of
Marlon.
attempts to support the currency coming out of the Swiss. And it sounds like your guest is on the
Yeah.
air.
Okay. Thank you. Next time I get you on, I'm gonna ask you about your implications for the dollar on all this. So
That's
we'll
fine.
we'll get you ready.
Good luck this week, guys.
Okay, Marlon Weems, how you doing, Marlon?
I am doing well. I hope you guys had a great Christmas holiday.
We did, and we're back in the saddle here on Monday morning for this abbreviated week of trading. Is there anything that I mean, do you still just kind of carry on your normal strategies this week? Do you cut back a little bit? You look for some year-end tax selling, maybe some cheapies. How do you approach this week?
It's always interesting to me when you have these abbreviated weeks, and I guess there are two schools of thought that, of course, I've always heard that a lot of firms you're sort of working with the B team because a lot of the senior guys are, taking vacation time and so forth. But when I was an active trader on the trading desk every day, I always found that being around this time of the year, at least for a few days, there were a lot of good opportunities to be found.
Okay, and are there going to be any such opportunities this week?
You know, I'll tell you, with notwithstanding what I just said, it's kind of interesting because there are a lot of things going on, with some of the hacking that's been in the news and so forth, and it does make you want to be a little bit cautious. But certainly there may be some opportunities to be had with some of the very folks that have suffered a little bit, and so such as a Microsoft or something like that. But I don't know that I'd be looking to do anything particularly aggressive going into the holiday. But certainly there's when opportunities present themselves, you want to be ready.
Okay, so you're the founder of Hillcrest Strategies, a value-based consulting service for institutional clients. Just tell us a little bit about Hillcrest, and just tell us about your typical trading day or your typical work day.
Well, the typical work day is, of course, I stepped away from the sell side a couple of years ago to start Hillcrest, and I still work with a number of small brokerage firms that, interestingly enough, with the climate that we're in, a lot of firms are trying to figure out how to handle, some of the upcoming regulation related to high frequency trading, and you guys all read the newspapers. I'm sure your readers do. There's always this sort of overreaction from a regulatory point of view, and it puts a fair amount of pressure on the smaller firms that don't have the big compliance departments, don't have proprietary infrastructure and so forth. So one of the things that I have been doing for 2014 is working with small firms that are trying to figure out, how do I compete in this new climate and still make money at it. So what I do is work with them in terms of understanding how they can formulate or structure their trading infrastructure. One of the things that I did earlier this year was a study on the order management system landscape. And what that means is, of course, the trading systems that brokerage firms use to execute their clients' business. And one of the things that really jumped out at me is that a lot of the smaller firms in particular haven't upgraded their infrastructure in as many as 5 years. So if you can imagine,
Huh.
just to put in perspective, if you can imagine not having upgraded your cell phone for 5 years, would be dealing with some pretty old technology.
Yeah, definitely. I think I mean, my question for you would be, I mean, we're shorter term traders here, and Dennis
Sure.
and I have talked, on the show and over the course of the years, how we've really tried to lengthen our time horizon, and that reason is that we can't compete with the computers. And news or reaction or
Um,
sub penning. But for longer term investors, I mean, do you really? I mean, I'll get your take on Flash Boys afterwards. But I mean, for the long term institutional investor, is there that much interference from the high frequency trading crowd?
Probably not. The high frequency trading discussion is, I sort of go back and forth on it. Obviously, if you look at it like anything else you buy, you want to have a fair opportunity to get the best price. And to the extent that there's something interfering with that, I guess the answer to your question is yes. But if I'm sitting at home, as I am now in front of my computer, um, is it going to affect the price that I get on Walmart? You know, Long term, probably not. However, there is that sort of hidden cost that everybody bears. So, it's a tough question, and I guess I could probably answer it either way. I think that at the end of the day, what you want is for everybody to have that equal opportunity to get the best price.
Okay, and so how do you help your institutional investors get the best price?
Well, again, I'm dealing more or less with the guys who interact with the sell side, mutual funds, asset managers, and so forth. And so, one of the ways that I assist is helping them review trading systems, helping them structure the infrastructure in such a way that you probably heard of smart routing and those sorts of things. Um, those are sort of the areas that I will look at.
Okay, and you also have done some work in the commodities area, and boy, oh boy, everybody and their brother is talking about oil here. What a move down from the $100 level! Is this something you've been active in, and what's your outlook now for oil?
I have had no real participation in the oil market, except that I enjoy going to the gas station a whole lot more than I did this time last year. But it is something that you have to look at, and you have to wonder about sort of the unintended consequences as it relates to some of the oil producing countries and what the impact could be there. I saw a headline not too long ago that this was going to be to say Russia or Venezuela, possibly the Middle East, what our financial crisis was a few years ago. I'm not sure that it's going to be that bad, but it has to have some impact when you take into account just sort of the outsized importance to those economies that oil has.
And going back to just a high frequency talk here, I finished Flash Boys over my vacation, and Dennis and I, it's funny, we kind of had the same opinion. We really loved the first chapter, and it was very interesting. And I continued to read the rest of the book, and it seemed. I have a very high acumen for the jargon and the language and what they were talking about, but boy, oh boy, it just seems like it kind of got repetitive. Did you have a chance to read the book, and what's your take on it?
I read it several months ago, and it was interesting to me, but for a different reason. And I understand that Michael Lewis is writing for, I guess, trying to write for mom and pop that are not that close to the subject and make it interesting and a good story to tell. And he certainly, I think, he accomplished that. For me, it was. I guess my first thought was, boy, yeah, I remember when this happened. So this was stuff that happened several years ago that, I didn't feel like he really broke any news as far as I was concerned. A lot of the things that he was talking about, I could certainly identify with because I remember sort of, being there as certain things were happening. So, for example, I can remember back probably 2006, 2007. I was setting up a trading desk at a boutique firm, and one of the ECNs at the time that's now since merged into being an exchange, came by and they had all these different strategies that we could use, and if you use this one, you get a rebate for X amount of money. So they had these incentives to make it, more beneficial to you supposedly if you use this, say route A instead of route B. One of the things I always would ask is, well, okay, so why is it that this one, why are you paying me to use this particular, point of entry way into the
Right.
market? And I would always get the answer, well, we can't tell you, but it's really good for you. So,
Yeah.
so, so, when Michael wrote about those things, I kind of knew, who the sort of usual suspects were, and I found it pretty entertaining. I think that, we just have to be careful because if you really look at it, all of that, all of
Lost you a little bit there, Marlon. We still got him on the line here. Okay, you have a little bit of technical difficulties here, but we'll go into a little market chatter here. Hopefully, we can bring Marlon back. S&Ps are in the green. Who cares about Greece? Right back up here, trading up a half a point here. Just made a new high, intraday high at 85 even. On the upside, we're looking at Friday, and Friday is the all-time high at 2,088.75. Keep an eye on that. But in the green right now in the session, being led by, you guessed it, Apple Computer. Trading up 58 cents at 114.58. Haven't taken a look at the Apple chart here in a while. Marlon, are you back?
I'm back. I don't know what happened
We
there,
got
but
the gremlins out.
I'm
Don't worry about it. It's Monday
well, I'm
morning.
in North Carolina, but I'm not that far away. So
No, no, it's the wonders of technology here.
yeah,
Uh,
yeah.
but
When it
uh,
works, it's great, but every once in a while, huh?
Yeah, it's I'm at the helm, so when I'm on, anything can happen. But what I wanted, we were just discussing the book, Flash Poison,
Right.
and I think I think if people hear us, Dennis and I talk on the show, they might think that we're like really like staunch, adversaries of high frequency trading, and that's really not the truth. I mean, they do provide a lot of liquidity. They provide a lot of function in the markets. They do, facilitate order flow and stuff. And so I thought his book could really been improved at least at some point with acknowledging some of the benefits of high frequency trading. I think he was just so slanted in one way that if you didn't really totally buy his whole story, then you came out with a negative opinion. What's your take on that?
Um, I didn't particularly walk away with that, and I guess we all have our own opinion based on experience, and I certainly have been in a position of trying to execute a trade, and and seeing sort of that there was somebody always in front of me, and I could never figure out, well, why is that? And so there's probably something to it, but it goes back to maybe your earlier comment. Is that really going to affect mom and pop that are trying to put money in their pension fund account? I guess you could argue yes, if the folks who are managing the pension fund are having it's having their performance affected. So indirectly, I guess there could be something there. Yeah, when you look at high frequency trading, I'm not so sold that the function that they provide is worth whatever it is that you give up to get it. And there are probably folks a whole lot smarter than me could that could comment on that. Um, So to that extent, I mean, hey, I was on the Wall Street for a lot of years, and I'm not against anybody making money as long as there's fair play. I think that what happens is anytime you have a set of regulations, there are going to be people that are going to say, okay, how can I make money from this? And that's that's what they've done. So how do you get angry with them for doing that when they're just playing in the field that's been set up for us all to play in?
Okay, and just final thoughts on the market here. We got about a minute left here with you. Just any kind of outlook, interest rate, market, what anything to disrupt this bull market in 2015.
I am not going to be the guy that says, we're over and done with. This has been an extremely strong market, and I think there's a saying about standing in front of the freight train, so to speak. I'm sure not going to do it. I think that as long as you kind of stick to some of the fundamentals, and I really try when I'm looking at investing not to pay a whole lot of attention to where the Dow is, because it to me doesn't always matter. I mean, if you're looking at sectors, the ones that are interesting to me where I think there are opportunities are, oh, I don't know, maybe the payment sector. A lot of, I think, interesting things going on there with, of course, Apple has their new payments system on the new phones. I think there are just a lot of things going on. But at the same time, you look at Bitcoin. They probably had the worst year ever. I think I saw just this morning that if you look at the price of Bitcoin from the high to where it is now, it's probably off about 50%. So, there's always opportunities no matter where you look, and I think you just have to be careful and not always pay a whole lot of attention to what the index is. I mean, it's certainly a good measure, but for me, it's not the end all be all.
Okay, we've had Marlon Weems on the line, and he's the founder of Hillcrest Strategies, helping institutional investors navigate these tricky financial markets. Marlon, thanks for coming on. Have a good new year, and we'll speak to you in 2015.
Well, thanks for having me, and you guys and your listeners have a happy new year as well.